Hello everyone! Today we will discuss about topic data flow diagram and general ledger and reporting system. Have you heard about it before? Let's start.
My name is Isaac Chandran and I will be presenting the Part A question. This presentation provides a detailed analysis of the data flow diagram, DFD, representing the current production system of Yesa Textile Sdn Bhd, located in Seremban. Yesa Textiles specializes in manufacturing ready-made clothing for all age groups. The following explanation walks through how data flows across the company's core manufacturing stages: product design, planning and scheduling, operations, and costing. The production cycle initiates with Process 1.0, Prepare a Master Production Schedule, MPS. The production manager begins this process by pulling and reviewing two critical streams of data: customer orders directly from the sales department external entity, and current stock level of ready-made clothes from the inventory file data store. Once this information is integrated, the system updates and records the data into the MPS file data store. Moving downstream, the finalized schedule flows directly into Process 2.0, Prepare Bills of Materials. In this stage, the immediate raw material requirements are determined to fulfill the production objective mapped out in the MPS. Once these structural requirements are established, they are filed and stored securely in the Bills of Materials file data store. Next is Process 3.0, Prepare Material Requisition Form, which officially requests the items needed to begin production. The system generates 3 physical copies of this form. The first copy is routed outward to the purchase department external entity. The second copy is sent directly to the storeroom so they can prepare the items, and the final copy is filed internally within the material requisition file data store. To keep the diagram organized and clean, an on-page connector A is utilized to seamlessly bridge this planning stage to the active manufacturing flow. Picking back up at connector A, the system enters Process 4.0, Begin the Production. This is where the physical assembly of ready-made clothes takes place. The storeroom transfers the requested raw materials into this process so that garment manufacturing can proceed. There is a specific feedback loop to note here. If the production team requires additional materials during active manufacturing, that request must be documented and flows right back to update the Bills of Material file data store. While production is underway, labor and costing data must also be tracked. This leads to Process 5.0, Prepare Job Time Ticket, which records the exact amount of time spent by production employees. One copy of this time ticket is sent directly to the accounting department external entity for wage calculation purposes. Finally, once the ready-made clothes are fully completed, they move into the last stage, Process 6.0, Pack Ready-Made Clothes. Here, items are packed individually, stored in designated containers according to design and colors, and physically moved out. This outputs a data flow of finished goods directly to the final external entity, the warehouse. This completes the data flow loop for Yesa Textile Sdn Bhd. By visualizing the production cycle through this DFD, the diagram clearly illustrates how information links physical flow operations with backend accounting and scheduling files. This baseline understanding is vital for analyzing the company's internal control environment and addressing its recent challenges in meeting demand. Thank you, that's all from me.
Accruals recognizes revenues or expenses incurred but not yet paid or received. For example, accrue wages, interest revenues, outstanding utilities. For deferrals, adjust transactions where cash is paid or received before goods services are used or provided. For example, prepaid rent, insurance, unearned revenue. For estimates, updates asset values to reflect actual or current value. For example, inventory write-down, stock count adjustment. Revaluations is adjusting an asset's recorded book value because it no longer matches its actual value or because an accounting method changed. Corrections fixes errors in accounting records to ensure accuracy. For example, posting mistakes, omissions, misclassifications.
For Part B, I will explain two case ways in which a well-designed audit trail can assist Sunrise Catering in verifying the accuracy and authorization of financial transactions. Firstly, the audit trail helps verify the accuracy of financial transactions. An audit trail provides a complete record of every transaction starting from the original source document, such as invoice and receipts, until the information is recorded in the accounting records and financial statements. In Sarah's catering situation, there are differences between invoice and ledger records, and some of the source documents have also been misplaced. Because of these issues, an audit trail is very useful as it allows every transaction to be traced and reviewed. There are two types of tracing involved. The first one is forward tracing, where we trace transactions from the source document to the financial statements. This helps ensure that all valid transactions have been recorded completely and accurately. The second is backward tracing, where we trace transactions from the accounting records back to the original source document. This helps verify that the recorded transactions are genuine and supported by a proper evidence. As a result, accountants and auditors can identify errors, investigate any discrepancy, and make the necessary corrections. Therefore, the financial information becomes more accurate and reliable for financial reporting and decision making. Secondly, the audit trail helps verify the authorization of financial transactions. In Sarah's catering, different employees are responsible for recording customer payments. This increases the risk of unauthorized transactions or recording errors. A well-designed audit trail records important details such as who entered the transaction, who approved it, and whether any changes were made. This enables management to verify that each transaction was handled by the appropriate employee and approved according to the company procedures. In addition, because employees know that every action can be tracked and reviewed, they are more likely to follow company policies and avoid fraudulent activities. Therefore, a well-designed audit trail strengthens internal control, improve employee accountability, and reduce the risk of fraud or unauthorized transactions, ensuring that all financial transactions are properly authorized before they are recorded in the accounting system.
We will move forward to part C. The company is experiencing fluctuating numbers of events each month, which affect the labor and supply costs. Explain how a flexible budget could help Sunrise Catering manage this issue more effectively. There are several reasons on how a flexible budget could help to manage this issue. Firstly, the Sunrise Catering can adjust costs based on the number of events. Since the company is handle different numbers of corporate events and wedding each month, a flexible budget allows labor costs for supplies and other variable expenses to increase or decrease according to the actual workload. This will prevent the unrealistic budget target. Next, it could also improve the control over labor expense. The company's payroll expense has been increasing, but the management is unsure whether labor costs are reasonable compared to the number of events handled. A flexible budget allows the Sunrise Catering to compare actual labor costs with the expected costs for the actual number of events, helping to identify whether the staffing costs are efficient.
Next, a flexible budget helps Sunrise Catering monitor supply costs more accurately. Since the number of catering changes from time to time, the amount of ingredients, packaging, and other catering supplies will also change. A flexible budget helps the company to estimate expenses accurately and avoid over-purchasing, control unnecessary spending, and wastage. Another advantage of a flexible budget is that it provides a fairer evaluation of the company's performance. Instead of comparing actual results with a fixed budget that may not reflect the actual number of events, a flexible budget adjusts to the real level of business activity. This gives management a more accurate comparison between budgeted and actual costs. It also helps identify areas where expenses are higher or lower than expected, allowing managers to investigate the reasons and take corrective action to improve future performance. Finally, a flexible budget supports better decision making and helps maintain profitability. By understanding how costs change as the number of catering events increases or decreases, Sunrise Catering can make better decisions about planned staffing, purchasing ingredients, and scheduling resources and setting appropriate prices for its services. This enables the company to respond more effectively to changes in customer demand while also maintaining profitability and long-term financial stability despite fluctuation in demand.
Thank you, Adrana and Noreen. Let's have a look into the next question, which is two key of financial goal. The first financial goal is to maximize revenue. As competitors in the industry and costs keep increasing, Sunrise Catering should aim to remain profitable and sustainable by generating higher revenue rather than compete through lower price. By maximizing revenue, Sunrise Catering can improve its cash inflow and reduce financial pressure caused by unpaid receivable. Higher revenue also enable the company to invest the better accounting system and operational improvement to support long-term financial stability. For example, the company can invest in long-term assets such as machinery, equipment, technology, and catering facilities to increase its operational capacity. As a result, the company will be able to handle more catering events on large scale efficiently, leading a higher sales revenue. The second financial goal is to optimize the sales outstanding or DXO to improve cash liquidity. Although sales may be increased, the business can still experience cash flow problem if customer delay their payment. A high DSO means that cash is tied up in account receivable, making it difficult for the company to pay the suppliers, employees, and other operating expenses on time. To improve cash liquidity, Sunrise Catering should shorten its collection period by implementing structured payment terms. For example, the company can require customer to pay 50% deposit when confirming the booking, with the remaining balance paid at least 3 days before the event. This ensures the company receive the cash earlier, reduce the risk of late or unpaid payment, and maintain sufficient working capital for daily operation. In conclusion, maximizing revenue and improve cash liquidity through a lower DSO, Sunrise Catering can strengthen its financial performance, remain competitive, and achieve sustainable long-term growth.